Well, good afternoon, everybody, and welcome to the COPEC Daily Webcast. I hope everybody had a great weekend, and I think we've got some great programs for you this week as well. Today, we're starting off with Picking an Advisor with Jay Lindner. Of course, my name is Jerry Snyder, and I'm going to be your host today. Jay does some hosting often as well. Today, he's our presenter. So, as you know, and for the people just joining us, we have this program every day at 2 o'clock, the daily program. So please join us. And also go on to the website, copeceducation.org. Without further ado, I'm going to have Jay join us, and we're going to talk about picking an advisor. And I'm glad we're talking about this topic too, because as an advisor, I often get asked this question. So Jay, how are you going to approach this subject today?
Well, thanks again, Jerry, and thanks everybody for tuning in. Yeah, I agree with you. This is something that many of the people we work with in our industry and in many industries, whether it's legal, CPA, counseling, whatever it might be, I think many of these things can apply. Obviously, we're going to maybe discuss this in a little bit more towards the financial advisor angle, but in general, I think a couple things to really start talking about is what do you want to accomplish? Think of it like a doctor. Sometimes you have to go to a generalist first to find out if you got to go to a specialist. Sometimes you know that you need to go to a specialist right away. And so it really depends on who you have as resources already in your life that can give you that direction. Do you want to kind of focus this from a generalist first to help take some of that unknown as far as picking a specialist? The comprehensive aspect of it is really important. Is it to have a long-term relationship or deal with one particular need? And then quite honestly, I think one of the things that we talk about a lot is making sure that depending on, and let's talk specifically on a general financial advisor, we do presentations all the time around town to businesses, to employees, and things like that. And one of the things that we say often is, they might meet us or they might be somebody else and they're like, oh, well, I've got somebody I work with, but I like working with you, or whatever it might be. And we always say, answer these three questions. First of all, the person you're working with, do you trust them? And that they're ethical, that they have your best interest in mind, that you feel confident that they really want you to do well versus them to do well. And if you believe that, then that is a big leap, right? In choosing somebody that you truly trust them. Doesn't mean you don't do your due diligence and you question and get answers, but that's a big thing, especially if you worked with somebody for a while. The second is, do they communicate with you regularly? Do they educate you? Do they spend the time to work with you? Or is it, look, I need you to get this sale and move on, or whatever it is. Those are some, telling signs. And then the third is, are they clearly qualified to do what you want them to do? A lot of times we might have people that are selling a product, but you view them as a comprehensive advisor. Well, are they qualified to do that? So whether it's a lawyer, whether it's a tax accountant, whether it's a financial advisor, those are three main things. And if the answer is yes to all of those, you're on your way to having a good relationship long term. And it's real important to, the grass isn't always greener on the other side. If you have somebody that fits the bill in those areas, I would highly recommend you consider staying with that person unless there's a reason to potentially move on.
Well, that's good. Jay, can you elaborate a little bit more on why somebody would want to hire a financial advisor?
Well, specifically when it comes to financial advisors, there's a lot of things that advisors do that either falls into that general practitioner and planner mindset, but they should have an expertise in a lot of the subsets. And let me give an example of like a certified financial advisor, which is really kind of the gold standard as far as financial advisors go. And they really have to spend a lot of extra time and expertise in not specifically in products, meaning this XYZ product, but the concepts of those types of products and services. And those fall into 5 major categories, which is the act of financial planning, financial independence, projections, the comprehensive, bringing those all together. The second is investments, then insurance, legal, and tax. Doesn't mean they do legal documents, but they have to understand how they work together, and same with taxes. And so those are some areas that you really want to consider. And what are some of the reasons? Well, gain better clarity. Maybe you just want to understand. Maybe you're a great teacher, but you don't do a good job of bringing things together when it comes to finance. So clarity on what you have, clarity on what you want your goals to be, and clarity on how to get there. And so that's one of the biggest key to the planning aspect that really is put together. Also, when you start growing and building net worth, you want somebody to be able to look at that and maximize the assets and tools that you have to reach those goals, which ultimately the goal that we want to get to is, retirement, being financially independent. And then obviously helping navigate and manage relationships that are those specialists. Maybe I need to get a trust done. Well, how do I make sure that works well with your planner? Maybe I need to get some taxes done, or I'm doing a large purchase, or whatever it is, making sure those specialists work well with your plan. And then, navigating life events, things like if you have a new family, right? You have some children and you have a mortgage. How do you protect those? How do you manage those? Maybe save for that first home. Illnesses, divorce, death in a family, job changes, maybe retirement, caring for aging parents. There's a lot of different things that are life events. And the more that you have that relationship with that generalist, that comprehensive financial planner, the better you can navigate those things and be able to make good decisions when we're emotionally having difficulties, right? How many times, does an advisor, they're managing the person as well as the finances to get through some of these things. So those are some good reviews of why you may be seeking some help.
I appreciate that. A lot of people are dealing with sales type professionals as well. And so can you elaborate a little bit on the difference between a true advisor versus maybe a sales professional?
Yeah, and quite honestly, this goes over the generations where, people might have had an insurance agent, people might have had a tax person or a CPA, people may have had a stockbroker, or people may have, you may have had these people and their job was to put you in these positions. And the big question is whether they represent you advisory wise or whether they represent a separate company selling a product. And it's not wrong to have somebody in your life that sells products, because we need products. But are they truly being independent? Do they have your interest first, which is that fiduciary, which we can talk about? But so a lot of times over the years, we might have had these product salespeople in our life. And many times over the years, they may have acted more and more like your advisor. But you're like going, wait a minute, I'm not 100% sure. Even though they give me advice, are they setting up the next sale? Are they really thinking about my best interest? Or, how are they concerned about me? Are they concerned that I'll buy something, or are they concerned that I'm getting my solutions answered and my problem solved and my clarity and my education and things like that? So it doesn't mean they can't give you good advice. It means that you just need to raise the red flags and be cautious that they may not have your best interest in mind. Now, with that being said, I mentioned before with the idea of the certified financial planner status, which is generally the designation that financial advisors should have, that shows them committed to the comprehensiveness that you need to have in providing advice, but also understanding where products fit, where planning fits, where all these different things are. And just because you're a CFP doesn't mean that you are automatically, doing the right thing. You need to make sure. Now, the CFP has done a lot more with the fiduciary recently, which I really like. But you really get this fee advice aspect, and then you get this product base. And just one last piece on the fee advice base is it is okay for you to go to an expert and say, I don't want to buy anything. I don't want insurance. I don't want you to do my taxes. I don't want you to invest my money. I just want to hire somebody to provide financial planning advice. And then from there, I may hire somebody else to do my investments. I may hire somebody else to do now you may hire that same person that gave you that advice, but they shouldn't be connected and required. So if you find somebody that is willing to do that, that may be, they may charge you an hourly rate, they may charge you a flat fee, but that is a great place to get somebody that's willing to give you advice without it being required to be connected to purchasing a product or those. Those are the people that I think give you the best chance of getting good advice without that follow-up, if you will.
Now, you've used the word independence a number of times, and then I know there's proprietary type relationships as well that certain salesmen might have. Can you elaborate on that just a couple minutes?
Yeah, I mean, it kind of goes back to if you're hiring somebody specifically just for advice, well, then you don't care. And by the way, you don't need to be fee only. You may provide multiple services. The question is, are they being a fiduciary and doing what's in the best interest of you? And you can choose. You could hire somebody that is proprietary and not fee-based only, and you trust them to provide whatever advice they want to give you. It just separates a little bit out when you talk about proprietary and independence. So if you're proprietary, not only one, are they selling a product, but two, are they looking at the whole picture and all types of things out there, or are they trying to sell a product and are they limited to just their company's product? It doesn't mean they can't do a good job giving the advice you need and giving great, excellent service and all the things that come along. You just have to have a double check as to whether that is the right person to give you comprehensive advice. An example would be, you might want to buy a vehicle and you may want to buy a truck. But if you only go to one company that only sells a certain type of car brand and only economy electric cars, which right, wrong, and different doesn't mean anything, but you really should. I'm a landscaper. I don't need that. Well, are they gonna say, hey, I did a full review and you shouldn't buy our cars? That's an honest person. But if they're only offering that one type of car from that one brand, but you really don't even know exactly what you need, you want something from an independent perspective that is willing to say, you should look at this type of vehicle. Now, here are 5 different types of groups that provide those kinds of vehicles, and you need to do your own due diligence as to what name brand or whatever it is that fits your need. So it's kind of being careful. You want to start general. You want to really, if you can, talk to somebody that's independent. But if they're proprietary, where they only sell one company, you want to take that with a grain of salt that maybe that company might not be the best for you. So you want to shop that around at the same time. They may be the perfect fit, but you want to match that up with checking other ones to make sure that other ones might not be a better fit for you.
Well, that helps a lot. You also kind of tapped a little bit on how different advisors are being compensated. Can you kind of go back on that point a little bit?
Yeah, I mean, obviously, one way an advisor could be paid is through providing services. And that's what we talked before about products versus advising only and those types of things. And if you feel confident that the advice you're getting, it's comprehensive, you trust them and all that stuff, but you're doing it, having them manage your investments or do your tax, whatever it is, there's nothing wrong with that as long as you're confident that it is not because of those programs. Now, when it comes to a financial advisor who only does, you only want them to do the planning. In general, those are done really three ways. Either through an hourly rate. You may say, hey, look, I want to meet with you a couple times to do an overview. Here's the issue about those, is that a lot of times those are kind of like a one and done type of a situation. Doesn't have to be, where you may sit there and say, look, we're getting married. We want somebody to look at everything and just verify clarity and whatever it might be. That might be different than I want a long-term relationship with an advisor that's there with me all the way through so I can trust them and they're there for me. And well, those kind of situations, it can be still done hourly if you want. Usually those are done really more under a flat fee. And the neat thing about flat fee is usually that's a retainer type contract where I am going to pay a certain amount of money and they're going to provide me that regardless of how long it takes. And some do those flat fees for maybe a year, and then after the year you can either re-up it or do hourly or whatever it might be. But it's a little bit easier to have that ongoing without feeling the clock being hit every time you make a phone call and talk to them. And then sometimes people, if they do the investment management as well, they may pay through the investment management, and it may or may not include the full comprehensive advisory on top of that. And those are especially good if it is non-commissionable. So if it's advisory, where it doesn't matter what investment you put me in, you're not being paid differently regardless of what investment that is. Well, even though it's an investment management, it's still done under an advisory capacity, which means you're not calling me up to buy and sell because you make more money if I purchase or sell this based on transactions or proprietary or anything. So that's still an advisory component. It's just instead of writing a check, it's based on maybe a percentage of assets under management, which is done many times to receive that advice.
Okay, that really helps. In terms of if somebody is really looking for an advisor, maybe for the first time, is there any particular sources you would recommend how they go about that?
Right. Well, first of all, it doesn't hurt to get references or referrals to get specific people. But if you don't have the trust in somebody that does a really good job, and the person that you're getting a referral from can vouch for how they handle them, and it doesn't matter how much money I have, they treat me the same, whatever it is that you're looking to do. You can check out and educate yourself with several great locations. The first one is the National Association of Personal Financial Advisors. You can just type that in, NAPFA, or the Financial Planning Association. They can give you some great insight as to how to shop and look for a financial advisor. I mentioned this before, the certification that is, I would consider the gold standard with personal finance, which is a CFP, Certified Financial Planner. There's other designations like CLU and CHFC and all that stuff, but CFP is the clear leader as far as designations. And then you can also go to the SEC website, U.S. Securities and Exchange Commission. You can look up history on individuals. You can find out where they're licensed, what they do, and ADVs, and those are just reports that a company puts out that lets you know kind of what their practice is and how they charge and things like that. And if you do work with any prospective advisor, ask them, what is their credentials, ask them for their ADV. Like I said, that's just a report. You can get it on the SEC website, or just ask the advisor for the current ADV, and they'll send those to you so you can see what they reported with the SEC. And usually those are the most thorough. Check out their website. How do they present themselves? Things like that. So those are great places to start.
And I think you just mentioned this maybe, but depending on the type of advisor you're dealing with, they should be giving you, certain disclosure information. What kinds of things should you review before engaging an advisor of that nature?
Yeah, that follows up, kind of what I was just saying there. Obviously, check out the website. I highly recommend you interview at least 3.
Okay.
Definitely interview 3. Check out those websites. See what clicks. See what doesn't click. Why are you picking those 3? Are you just doing it off of Google, or are you getting references? Check the credentials, like I mentioned before. Too many times people may sell insurance products, or they may sell investments, but they hold themselves out as a comprehensive advisor when in reality they're not. They haven't been trained for it. They don't have the due diligence that goes behind it, the fiduciary, a number of those things. You got to be, I don't want to say careful, but just take the extra checks, because you can get great comprehensive financial advice from somebody that only sells a certain product. The problem is that you have to make sure that that's the one that does it, because a lot may not. They may not do those things. And then, like I said, the SEC for the ADV is really, I think, important for most people to check out, because it gives that comprehensive review.
Then I suspect you would recommend that they really interview the actual prospective advisor. If that's the case, are there certain questions that you want to make sure that they would ask?
Yeah, and I've actually got a list here that I can throw out here in preparation for this. So the first, like I said, interview multiple advisors. Get references. They're going to give you their best clients, but they're not going to, for those clients to be a reference, ask them for some clients that don't, maybe you can't ask that, but that are maybe younger, or you want to try to find out that they're not the multimillionaire next door that gets all the attention. They're not going to obviously share, personal information and those types of things, but just get references so that you can at least talk to them. Look, your money is so valuable. It is so important to you for the rest of your life. It's worth taking the extra care and interview people that have experience with these advisors. And like I said, interview 3. You may be at one and you're like going, hey, this person's great, but then you go to another and you're like, wow, I didn't even know I could think this way differently. The other one seemed great, but this one just gets me better, or whatever it might be. Also, are you a fiduciary? They don't have to be, but boy, it's nice to know that they follow the rules of being a fiduciary, which is that they have to put your best interest first, that they have to put their needs above your own. And so that's one of the best things about doing a fee, paying a fee for advice, so that they follow those rules as best as possible. Comprehensive financial planning, not just investment management, not just insurance or whatever that is. You want them to see the whole picture. You want to see how, if they bought this, how does it affect your taxes? How does it affect maybe legal situations if you have a trust or whatever it might be? How does it affect your cash flow in retirement or preparing for it? There's a lot of different reasons why you want to look at that. How they'll help you reach their goals. Not just, I'm going to get you this investment rate of return, but what is your goals? What are you trying to accomplish? And what are all these financial tools that can be brought to the table that can help you meet those needs? And remember, insurance is to protect if things go wrong. Investments is to help save for goals, other goals you have. So it's almost like, how do you handle those potholes in life? Those are great insurance tools, but you have to save for your future. Well, what are the tools that give me the best growth going forward? But how are those defensive? Are they aggressive? Are they diversified? So there's a lot of things that go into that. If you work with an investment manager, which can still be advisory, obviously, who is the custodian? We obviously have had some experiences in the past with well-known national people that have done improper things. And usually that type of fraud is because they don't use a reputable custodian as a third-party holder of your assets. So there's a number of firms out there, I'm not going to mention them here, but that are very well known. And that's where you want your money to be and your reporting to be, so that you've got some separation between the advisor and who's holding the money. It removes a lot of that fraud component. So you want to, unfortunately, we've seen too much of that in the news. Let's see. Investment philosophy. Now that's a big one. Just because you can get a certain rate of return doesn't mean that's right for you. Understand what their philosophy is, how they manage it. Are they trying to get maximum returns? Are they trying to be defensive? Are they using index funds? Are they using managed funds? Are they set it, forget it? Are they active? I mean, there's a lot of different people that have different strategies. And so you want to really take a look at that. And then how do you provide ongoing education? I'm a big believer that if you spend a lot of time educating, then you spend a lot less time putting out panic and fear, because we've already talked about it. It's like working with anybody else. Hey, all right, let me give you an example. Everybody's afraid going to the dentist. And, when they come out with that big needle, so they put, hey, what I'm going to do is I'm going to go ahead and put this there, and it'll make it numb a little bit. Then when I do it, I'm going to let you know the more that they talk to you, the more that they educate you and spend the time, that when that happens, you were prepared. So in investments, especially, we talk a lot about it. So when it goes bad, people aren't surprised. They understand it's part of their portfolio. We've controlled the risk, and so those are things that people want to look for. Jerry, I know that we're running.
Yeah, we're kind of wrapping up here. We've got just maybe another minute left. You hear the term kind of buyer beware. Maybe in summary, can you mention maybe a few things that the individual really should be wary of in dealing with advisors?
Yeah, I mean, things like not giving you information. They need to be fully transparent. If they're not giving you the ADV, if they're not giving you references, if they're not giving you information that can help you make a sound decision. Pressure. If people pressure you in any way to sign documents and to do those things, I'm a big believer. You know what I do. If you want to work with me, let me know. If you have to pressure somebody into signing documents or buying then are they really out for your best interest? And a good advisor can't tell you when it's right for you to either buy something, it's really for you to decide that. And anybody that provides that kind of pressure, it's a really bad telltale sign that maybe they're not looking out for your best interest. Overpromise on investment returns, that's a bad thing, because nobody knows what the future holds. And so you got to be really careful there. Full disclosure of investment fees and performance. You really want that education. Bad mouthing a competition or another advisor. Unless, hey, I heard he went, but I'm a big believer that it's not my job to ever badmouth somebody. I'm a big advocate for the industry as a whole. And there's a lot of great advisors out there. And so to badmouth anybody is kind of a scary thing, in my opinion. Giving advice without fully knowing your picture is tough to do. And, like I said before, failure to provide references is, that should be a standard as far as I'm concerned. So those are some things that you might want to be wary of.
Well, I think it's time to kind of formally close up on the program. It's always kind of frustrating that we need to kind of stick to our timing here. But Jay, we sure appreciate you being with us today. And I know you're going to be back on other investment topics as the month progresses. So thanks to everybody that's joined us. We're going to shift gears tomorrow, talk more about long-term care again. So if that interests you, we'd love to have you join us there. So again, thank you for joining us. Thank you, Jay. And we will talk to you tomorrow, hopefully. We will kind of keep the lines open if there's some last-minute questions that come in.
Thanks, Jerry. And yeah, if anybody has any questions, just let me know. But check out those program sites and things like that. Those are great resources. Thank you.